bring in Keith McCullough now. He is the CEO of Hedgeye Risk Management and a Bloomberg Television contributing editor. You see him here often. He's on the phone this morning. Keith, we just heard from John on the subject of commodities and China with respect to that trade deficit, the first in 6 years. We've talked to you a lot about China. How do you interpret what we've seen from China? What does it mean for inflation, and how do we sort of digest it over here in the United States?
Eric, this morning it's a huge read-through on inflation. Import prices up 17% year-over-year. Again, 17% year-over-year. And as John just pointed out, the import number was up 66% year-over-year. So anybody who is running around saying they don't see inflation, I think that they need to open their eyes and kind of look at the world for what it is. You also saw industrial production in India be a 15% number. So the world's really heating up from a growth perspective, and I think stock markets and commodity prices reflect that.
How, though, I mean, is there precedent, Keith, for China setting the pace for the United States, say, when it comes to inflation?
Yeah, definitely. I mean, if you look at the Chinese peg, Eric, if you go back to 2005, I mean, it was a slow and steady climb that really had a high correlation to their inflation rate. So they stopped doing that, of course, in the middle of 2008 when we went into deflationary mode. But we're right back to where we were from an inflation perspective. If anything, it might be even hotter.
Okay, Keith, I want to move on to Greece. We've been talking about that aid package the EU fashioned for Greece. It's going to come in if necessary. We have to see how bond markets respond when Greece goes begging in the coming weeks. But in the meantime, how do you trade the situation? We've talked to you at length about the euro. Initially, you thought the euro was oversold in the 134, 135 neighborhood. Then again last week, I believe, you said it was time to short the euro. The euro is rallying this morning. Where does it go from here?
Yeah, I think last week when we talked, Eric, we said traded in a range of $1.32 to $1.36, and we're right back up to the high end of the range, which is $1.36. The obvious call this morning, I think, is again fading the consensus associated with these government bailouts. So $1.36 is a very good entry point on the short side, for the euro.
And does the trading range remain 132 to 136, or does something in this EU aid package change the picture going forward?
Well, if anything, it makes it more attractive on the short side. I mean, the rhetoric that's coming out of the Prime Minister in particular, Eric, kind of reeks of John Mack, Dick Fuld in terms of pointing fingers at the speculators and using this really big, broad brush of government rhetoric going after people that are really the evildoers on their currency. The real problem here is that this country has 304 billion euros in debt, and that's not going away. Maybe 10% of it gets bailed out, but that's not going to be a long-term solution.
Well, like you say, the long-term solution remains to be seen. That's Keith McCullough, CEO of Hedgeye Risk Management, a contributing editor here at Bloomberg Television.